A new week is here, and this time it's week 49. Only a few weeks to go until Christmas, and Nasdaq is in a good mood. Nasdaq up 1.13% to 19,218 points. Dow Jones also up. And if we look at the charts, and we like to do that in this podcast, everything is indicating that they will continue with green weeks as we move forward to the new year. Maybe even with a nice rally at the end. And you, my friend, are listening to the StockInvest.us podcast, Trading Tips with Jim, where I will tell you what I think will happen in the week ahead of us. Sometimes I give a few trading tips, and by the end of the podcast you will hear about the $1,000 challenge, where I try to grow $1,000 as fast as I can. And lately we've been struggling with that, going for losses, where NIO is the trade that we try to play. Currently down 12% for NIO trade, but more about that in the end of the podcast. The week ahead of us has a few quarter results coming out. It's the absolutely end of the quarter season, but there will be a few quarter results coming out. Nothing special, but you can trade on them if you are able to guess the direction. Today, for instance, Zscaler, working in the defense industry, will come. IT defense industry, that is, will come with quarter results, and the move is expected to be plus minus 5.8%, meaning if you are able to guess the direction correctly, put your trade accordingly before the results, you could see a 5.8% gain or thereabout. Tomorrow will be Marvel, and Marvel is expected to move 4.37%, and followed by Salesforce will also come tomorrow. Wednesday there will be some different economic data, but nothing really special. Most interesting, at least for me, is Foot Locker is a stock that I hold, which I think has a huge upside. They had a brutal fall after having a lot of thefts in their stores. They had to close down shops, profit margins fell, everything went in the wrong direction for Foot Locker, but being one of the absolutely biggest shoe chains in United States, delivering very nice results years after year, having these dips is natural, and I used the chance to buy Foot Locker very cheap. Will it push upwards on Wednesday? I don't know, but on Wednesday will be quarter results. They have already starting all processes to make their economy better. Cutting different shops, restructuring, and everything in between and above. But quarter results on Wednesday, and the expected move is plus minus 8.4%. Can be more than that, of course, or less, but that is what our system think Foot Locker will move. If you're able to get the Foot Locker direction correct, well, 8.4% is expected move for those who do day trading, and Foot Locker getting the direction correct may give you that or more percentages in change. Thursday, things starts to heat up a little bit. More interesting stuff happening on Thursday, because on Thursday we will have job numbers, and as I've been talking about over and over again, I don't think that we are done with inflation by any means, and I don't think the interest rates will be cut as fast as everyone thinks. So far I seem to be correct in that one. I actually think interest rates will have to go up, despite Trump being the new president. I think that everything showing how things are moving in Europe, for instance, with Germany, etc., all the geopolitical tension, I think that the pressure still will be on the wrong side of things, and I think that interest rates will remain high. I think inflation will remain more sticky than I believe. It has nothing to do with tariffs at all. This has much more to do with energy, how energy flows. And if energy, oil prices go down, but oil is still sticky, staying around $69, falling $2 from last week. With all the geopolitical tension, there is no room really for oil to fall very much. If oil falls, if Trump gets his will about making energy cheap again, then inflation will come under control. But as long as energy remains high and still almost 2 months left of Biden's presidency in the White House. A lot of things can happen, and there is absolutely nothing in my world saying that energy should collapse anytime soon, making it sticky. But most people, they focus now on the unemployment number. Now, if unemployment number come in at certain levels, there's a higher chance that Fed will cut the rates to stimulate the economy. First sign will be Thursday, where there will be weekly job numbers. Friday will be more important, as we will see how November actually went. The expectation is that the unemployment rate in US increases from 4.1 to 4.2. Nothing special there. But Thursday numbers is equally interesting. And what we see week after week is more people on benefits, more people outside the workforce. How long can these things continue? Dollar Tree will come on Thursday, Kruger will come on Thursday, Ulta Beauty will come on Thursday, and DocuSign will also deliver quarter results on Thursday. DocuSign expected to move 4.39% for the quarter results given. So these are maybe trading tips, but only if you are able to get the direction correct. The signals which we like to follow, the buy and the sell signals, often indicate if the market is overheated or not, or oversold. They are very, very stable across all tickers that we analyze. The number is very much the same. Nasdaq up from 19 to 21, totally within a good range. New York Stock Exchange remain high at 44. London at 24. Frankfurt up from 39 to 46. Tokyo down actually from 31 to 26, while just in China is up again from 33 last week to 63% buy signals. Has to do with the stimulus given in China right now. National Stock Exchange of India up from 15 to 27, and if we look at the chart of NSE 50, National Stock Exchange of India, the index 50, we can clearly see signs that the index is trying to break out from a falling trend more into horizontal trend, which eventually, hopefully, will put National Stock Exchange of India back in a growth trend, because India has been doing very good so far this year. Last few weeks had been on the downturn, but somewhat natural. Looking at the charts of Nasdaq, it just looks very, very perfect if you ask me, staying within a very narrow trend, moving upwards, tons of support downside, very little resistance above, and it's just indicating that there is a high chance the market will push upwards. Yes, it can move a little sideways, but there is nothing really in the chart saying that the market should go down. And more importantly is what I try to say, that now we see a more broadening upturn in the market. And I read some comments before the podcast that experts are expecting this to be the case of 2025, that we start to see pickup in all of the stocks that hasn't done very well. Yes, market is up and they are celebrating strong market. Nasdaq is up, but if you understand how the index is composed, we do know that when, for instance, Tesla go as they do lately, pushes the entire index upwards. Big companies like Tesla and Nvidia, they move the entire index. So these companies might do good, but the rest of doing bad. And that's been the case actually week after week. I've said there is 70% of stocks going down, while only 30% of the stocks going up. Now we start to see changes in these numbers getting more interesting, and I think it is a fair chance that most of you listening to this podcast will start to see nicer gains into your portfolio again, because most of you have ended up with penny stocks and all other stocks where you probably shouldn't have too much exposure, losing out of the good gains that been, for instance, in the bigger companies like Meta, Nvidia, Tesla, Microsoft, Apple, etc. Hopefully now it will be your turn. Gold down $12 last week to $2,658. And I read this morning that China just discovered what they think might be the world's biggest gold deposit. It will be interesting to read more about it. I also read last week that banks across all of the world, and especially Eastern Europe, are buying gold very, very heavily and moving even gold away from Bank of England into their own deposits. And this has been the trend over the last 2 years, and especially this year. The big banks are getting into gold as a part of all the geopolitical tension that has been. It's natural to secure some of your assets into gold, and some of them, as I said, have been moving gold back to their home country. I'm a strong believer in gold, and argued why I bought it many years ago at $1,600, celebrating very nice profit, just a little bit more, and I will be in the double on gold. Gold is a part of my diversification, and I still think there is a huge upside. I said first time 2,500 was the target. That was the target I gave you over and over again. And now I have increased it to 3,500. I said when Trump won that we should have a fall down to 2,200. Didn't happen, was 2,500 before Biden allowed Ukraine to use long-distance rockets along with France and UK. And that, of course, pushed gold upwards. And with all the uncertainty that is about the next few moves of the sitting governments, etc., gold most likely will push upwards. The most obvious thing right now, if you wonder about that, is boots on the ground. I will not be surprised if any day now we see news about the boots being moved into the ground of Ukraine. None of this will have a happy outcome. Of that I'm very, very certain. But we just have to follow. Good news is, of course, that Israel and Lebanon has reached peace agreement. Hopefully we can start to calm these things down, and we can get into a very nice 2025 where we can make some good money. Because it doesn't matter how the stock market has done, if the world comes to just big chaos, then everything will fall down and you will have very little use of your money, unless you are in gold, of course. 10-year treasury yield fell by 5.5% last week to 4.18. Good sign for market. When this goes up, market usually struggles. When it falls, it's an indication of pushing market further up. This week we will know a little bit about work numbers. Work numbers will dedicate a little bit what Fed will say about the interest rates. But despite of this, unless there is some increase in the geopolitical tension, like starts to get out of control a bit, everything is indicating that the market will just continue upwards. I wanted to give you a small trading tip. Been far between good trading tips lately. One thing you can do is, of course, invest into dividend stocks. And I told you, for instance, for war stocks, which I've been arguing for year after year now, I don't see the real stock price upside for war stocks. I think they will start to flatten out. You have to remember the pricing works like this. You estimate the future you are willing to pay for the stock, what you think will be the future. Here comes the PE ratio, the price to earnings ratio, and all of these things. So if we expect someone to make more money in the future, we are willing to pay more for the stock price, and the stock price goes up. I don't think most professionals see the huge upside in the revenue. Now, if we go a few years ahead, I think most people expect that Trump will follow up his promise of being a peace president like he was in the first 4 years, and that he will work towards peace in the world instead of conflicts. We know that he's very hard on NATO, pushing for fulfilling minimum the 2% pledge to the union, and maybe even upwards to 3%, and that he wants countries to increase their defense budgets. We know all of this, but this, I think a lot of these things have been discounted into the prices of weapon stocks already. There are some selected cases which I think will do good, but, and I was talking about dividend, I think these stocks will pay very nice dividend, very secure and nice dividends over the years to come. I do not expect them to have very, very much upside in the stock price, unless we continue with all this tension. But in general, I think the dividend will be very, very nice, very secure. I think in general, if you sit with this or stocks as a part of your portfolio, I think that moving 3, 4, 5 years ahead, you will think that maybe I was right when I said that overall the outcome would be very good. And I think they will handle this downturn in the market somewhat good. But dividend stocks you can invest into, and if you invest into dividend stocks, you have to buy the before the so-called before date if you want to be enabled for the dividend. And some people, they speculate in these things. They buy before the dividend date and sell later. They get the dividend, sell the stock, of course. So you have to be eligible for the dividend, so you get it and then sell and harvest on the dividend. I was looking at Nasdaq to see what stocks, for instance, today will have their before date, meaning that you have to buy them today to be eligible for the dividend, and how many days will it take for you to recoup the stock price, because it works like this. You get the dividend on the payment day. The price will be adjusted according to the size of the dividend. There is a market adjustments for this, and it starts to trade so-called ex-dividend. How many days will it take before the stock reaches back to the original price? So you get the dividend, and if you sell on X date, now it will be adjusted for dividends. You actually don't get very much. The stock price has to return, unless you will stay in the stock. For Nasdaq today, there is a lot of stocks with dividends. FT Aviation, for instance, will pay dividend on the 16th, but you have to buy today. So you have to buy today, then you have to wait 14 days. You will get $0.50, 50 cents dividend equals to 2% of today's stock price. You'll get 2%, but you have to stay according to the calculations in my system. Actually, you have to wait 9 days for the stock price to recover. So that means now if you buy FT Aviation today, for instance, you have to wait until payment day, of course, to get the dividend, and furthermore for 9 days. So you'll be sitting till a few days into the Christmas, and then you will be back. So absolutely not very much, but it is a way to trade. And some of these stocks, they have much higher, they pay very, very high dividend, very, very fast recovery. Not in Nasdaq today, but if we, for instance, look at Oslo, and I like to do that since I'm a Norwegian and I have a lot of Norwegian followers in this podcast series. A small company like Panoro Energy, for instance, will have before date tomorrow. They will do a payout on the 10th of December. It's expected to pay 0.47% dividend, 0.42 kroner or 42 øre dividend, equal to 1.61%, and will only use 6 days to get back. Not much there, but if we move to the next one, it is a little bit more interesting, because Hög Autoliners AS, How2.OL is the ticker. They will have before date on the 9th of December, meaning you have to buy before the 9th of December. They will pay you out the money on the 18th of December, will come to your bank account. The dividend will be 14 kroner, according to the numbers giving now, equal to 11%. And historically, they only need 2 days to recoup the ex-dividend price. So that's one if you are into dividends. So Hog Autoliners will come. More interesting is Polaris Medi, which will be first in 2025. We'll get back to that, but they are supposed to pay 24% dividend. I am in a lot of Norwegian dividend stocks, and some of them are absolutely heavy payers. MPC, OL 2020, Agas are some of these stocks which I personally are in. I argued why I'm in these stocks, paying extreme nice dividend, but had a few beatings in the stock market over the last few days I saw. But the big dividends they pay, 40%, 50%, some of these give a lot of good room. Stop that, or to top off that argument, what I'm trying to say is that you can of course play dividend stocks, and for war stocks, I think many of these war stocks will pay very these were shipping stocks, these Norwegian stocks were shipping stocks, but for America, Norway, you will have Kongsberg, which I've spoken too much about, which is up 4 times stock price, but in US you also have a lot of weapon stocks, war stocks, and I think they will just pay very nice dividends and be nice ways to have a secure income, where you don't have to care so much about how markets move, because market will move up and down. Things are boiling absolutely up to an epic stock market fall, but when will it come? Will it come just after Christmas? Will it come in a year? It's so hard to say. Right now, as I said, the market looks very strong technically. Offset in the geopolitical issues can cause anything to happen, but right now it's nothing indicating that the market should take a huge fall. Actually, it's indicating that we might have a small Christmas rally coming up, and then we'll just have to look what will happen after New Year. But everything is building up for a reset at some point, but that will just be a new place to buy again. I'll not speak much more about these issues now. I gave you the quarter results, which is coming during the week. You can trade on these. You can find at StockInvest or getagraph.com. You can find how much the stocks are expected to move if you want to try to play that game. Quarter results and dividends are also coming. You can pay, you can buy on dividends, play on the dividends. Some pay very high dividend, some have huge moves, some have very short recovery. So there is many games to play. In general, I expect market, and the broader market is more important, to go up, meaning it's a fair chance that most of you will have some nice weeks to come. In the crypto world, everything is indicating the same thing, that crypto will just slowly push upwards. And my portfolio, yeah, it goes a little up and down, but it is on a nice upstreak, and I think that will just continue. Bitcoin struggling a little bit with 100,000, but that was in the cards. Having very great support below 95 where it is today, then 90. And if 90 is broken, there is support at 85. 80, 75, at some point it will just start to pick up again. That is my prediction for Bitcoin and crypto in general. 2 minutes about the $1,000 challenge. Don't need much more than that. It is maybe the most interesting item in this podcast series, because for a long time I was doing the right picks one after the other, a few missteps, but short in. But the last pick into NIO, the choice was between Tesla and NIO, and I did, stupid me, into NIO. I should have went for Tesla, because Tesla has had an amazing upturn and things would look so much greater. But I went into NIO at $5.10, and currently NIO is sitting at $4.48, down 12.16% since I bought it. And it really struggles to move. But I am a firm believer that EV will come, and the reason Tesla is moving but not NIO. NIO delivering good quarter results, growing very strongly, having a huge market size, market share, facing the tariff talks. That is the thing holding NIO down, why people do not want to invest into NIO because Trump is promising to hit them so hard with tariffs that everyone buy American, and EU, for instance, gave a huge tariff on cars from China. I think it was 30% for some and even more for others, depending on sizes of battery and different things. But EV, in my opinion, is the future. I am positioning even harder into EV now. That is my sector bet for the long term, because we are not moving away for the need for cleaner cities, less pollution. Yes, the engines are getting better. All other engines, fuel type engines are getting better. Diesel, benzene, whatever it is, gasoline. These engines are getting better, less pollution, etc. But in general, I think EV is, and they are building out charging stations everywhere. The logistics is getting there. We had the downturn. When will the real upturn come? I'm not sure. It can be delayed by some time, but it will come, and I will be in there when the real upturn comes. But the $1,000 challenge is currently back at $2,562.48. Started at 1,000, got up to almost 4,000, and then we have taken some huge hits. Now only at 2,562. I still stay in NIO and believe that will be a good case eventually. Should have gone out, but the other alternative is to sell and go into Tesla. I had a look at Tesla, and if you're a Tesla owner, Tesla chart looks very good in my opinion, and I will not be surprised if Tesla goes on a small rally up to $500 in the nearby future. That's it for today's podcast. Became a little longer than I thought, but I hope you enjoyed it, whatever you are doing, if you are driving, or if you are in the gym just listening to the podcast. I hope you have a really good time, and I hope I'm correct when I say that there will be a broader market upturn. That when we speak next week, if you will be tuning in again, that your portfolio will be much greener than it was in the beginning of the week. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.